Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of gold in front of us, and as you can see, that market is standing at 1958. You can see that we have a falling wedge on the chart of gold. So falling wedge is a trend reversal pattern. But before I proceed with the trend reversal part, there are many things that we need to discuss. First of all, I have removed the support line around 1936 because yesterday when there was not much volume, we were waiting for a move. Yes, we got the move. Market broke 1936 level, gave us around 30-40 pips, but we saw immediate recovery and market formed a big green candle, a bullish engulfing pattern. Okay, so as a result, this line is no longer valid. The support around 1936 is no longer valid, and we need to focus on this particular portion of the chart. First of all, a wedge pattern. Wedge pattern is a trend reversal pattern. And during the US session, we also have some news. So if market pushes, then there is a possibility that we may get to see an upside. But right now, there is a high chance that market is waiting for NFP, not for payroll. There's a high chance that we may not get to see a crazy big move or complete trend reversal before NFP. Yes, we have a news, but this news does not have the potential strength to change the direction of the market. But still, we need to be careful. After we are retail traders, we cannot predict the market. Okay, okay, so let's try to understand the levels one by one. This is chart prime, and we can see the signals generated by the tool have done a great job. We have received an accuracy of around 75%, which we have been receiving for the last couple of weeks and months. But this time you can see that the tool looks different because the chart prime team has improved the tool and brought new features. The wave tells us about the range of the market and the concentration of buyers and sellers. On the middle, you can see that there are some unimpressive lines. The maroon lines, those are dynamic support and resistances. Though they do not look very beautiful, but trust me, they are excellent. You can see how beautifully they are playing the role of dynamic support and resistances, so that you don't need to use moving averages. Then you can see on the middle, they also have a red line, a green line. That's a trend assistant line that tells us about the trend of the market. We know it very well that trend is our friend. So with the help of this line, you will always find following the trend of the market. The oscillator has also witnessed some changes. The oscillator has become a pro right now. Apart from overbought and oversold levels, the tool is excellent in finding divergences. If you trade on divergence, then this oscillator will be very useful for you. And if you prefer to trade on smart money, then Chart Prime's Market Dynamics Pro is very useful. It will tell you about the change of character, break of structure, etc. And they also have chart detection, candlestick detection, and many other features. If you're puzzled right now with so many features, then don't worry. Join their Discord because they take weekly classes. You can become a part of their weekly classes sessions to learn about these awesome features. Right now, they are giving a 30% discount. Feel free to check them out. You can also scan the QR code on the screen and also check out the link in the description. First of all, if market starts going up before news, if market starts going up and if you see that the volatility of the market is not very high, kind of low, then we can expect 1967 to act as an immediate resistance. We have some minor sellers around this area. You can expect 1967 to work as the first resistance. If market shows reversal around 1967, we can go for a sell position. How we have derived 1967? Let me show you. we have considered Fibonacci, and you can see that when we are considering Fibonacci from the topmost level, this is the Fibo 23.6%. So as a result, we are expecting some selling pressure around this area. But Fibo 23.6 is not a very strong level, it's a weak level. That's why volatility of the market will matter. If market remains like this, then only you can expect that sellers will be able to push the market down. If market shows reversal signs, market shows price rejection from above, you can definitely go for a sell position. But if market shows volatility, if market becomes very volatile, then obviously you need to be careful. In that case, this will not work, and then you can expect 1977 to 1979 to act as the next resistance. In comparison to 1967, 77 to 79 is a better level. Why? Again, we are considering Fibonacci here, but we are considering Fibonacci from a different level. You can see here why we're considering Fibonacci from this particular point, because here 23.6% work. So we can expect that Fibo 0.38 to 38.2% will also work around this level. If you're confused, forget about it, just concentrate on the level. Right now I'm doing this on the 4 hours time frame. You can simply switch to 1 hour time frame, 15 minutes time frame, okay, so that you get faster confirmation from the market. Okay, so if market shows price rejection from below, then only go for price rejection from above. Okay, if market shows price rejection from above, market shows a shooting star kind of a pattern or bearish engulfing pattern, bearish pin bar, then only go for a sell position around these areas. Okay, so volatility of the market will play a big role. If market reverses, then only go for a sell position. And at last, we have good sellers around 1985 to 1988, 1985 to 1988, because you can see strong price rejection around this area. So that's why we are also considering this level. So we have 3 resistances, or we have 3 levels where we can expect sellers to be active. First of all, 1967, 1968, secondly 1977 to 79, and then 1985 to 1988. And as we have already discussed, that market is inside the wedge here. So if market fails to cross this line and market comes down again, because in wedge pattern we need the market to squeeze. Okay, so if market comes down for further squeezing, then there's a high chance that we will get to see good selling opportunity below 1948. Good selling opportunity, it means only for day traders, not for swing traders. Okay, for you can look for some quick selling opportunity of around 35 to 40 pips. Because if market breaks 1948 level, then obviously market will be heading towards the line at the bottom. But still, to be on the safer side, we will be looking for 35 to 40 pips. If market breaks 1948 level, again listen to me carefully, if market breaks the level of 1948, and if you see that market is going down, then there's a high chance that we will get our profit or expected pips of 35 to 40, and you can go with it. Okay, so these are the levels for today, and be careful during the news. Okay, market should not get very crazy, but still you need to be careful, because after all, news market can be dangerous. And the ultimate support on the chart of gold is around 1908, 1909. We have already discussed yesterday. So this is the next level where you can expect the strongest buyers to be present. Okay, in case market shows good selling, extreme amount of selling, 1908 will be the next level where you can expect buyers to be present. Okay, but this is not the strongest support on the chart of gold, because we do not have any strong support that have the potential to reverse the trend of the market right now. Okay, these are all on the basis of Fibonacci or previous price rejection. So be careful and follow proper risk management. And if you look at the news, then you can see gold, little change, Congress vote on debt ceiling in focus. Yes, debt ceiling will always be on, or not always, will be on focus. Okay, and obviously NFP also coming up. I think market is mostly waiting for a news, so please be careful with your stop losses. In case the market shows extreme move and you are trading without stop loss, then please try to exit if you see that you are standing against the trend of the market. Okay, so market is mostly waiting for debt ceiling news and NFP. Let's wait and watch, and it is better to focus on day trades only. Day trades are safer in this market condition right now again. So please use proper risk management. As I always say, be a trader, not a gambler. Do not gamble with your hard-earned money. Bye bye, take care.